Hey folks, welcome to the latest edition of the TheStreet Stocks and Markets podcast. I'm Chris Versace, the Street Pro Portfolio Manager, and on this episode, we're going to be talking about May inflation data, key dates for the market as we head towards the close of the June quarter. We'll answer some member questions and much more, all with Street contributor Bob Lang. Bob, thank you so much for joining me today on the podcast.
It's always great to be with you, Chris, and share some kernels of wisdom and nuggets with the subscribers.
I'm glad to think you're bringing some kernels of wisdom. Excellent. I look forward to this. So, Bob, this is kind of a really busy week for us. There's a lot of key inflation data coming, something that you and I talk about almost incessantly in our public and private conversations. Yep. What do you think we're going to see with the May CPI and the May PPI reports?
Well, certainly the trend in inflation has been coming down, Chris, for the past couple of months. And we talk about using more of a longer range inflation reading as opposed to just one number which comes out every month. So what am I talking about here? We like to look at 2, 3, 4 months of data.
Triangulate, right?
Triangulate, there we go. 2 to 3 months worth of data to really get an idea of what the trend in inflation is. Mm-hmm. And the last couple of months, Chris, April and March came in with some pretty good numbers. And if we see some good numbers from May, that's 3 months in a row. That is probably pretty much enough for the Fed to start having a debate about whether it's time to cut interest rates down the road.
I understand that there's some out there thinking that maybe we'll see some softer CPI numbers, PPI numbers.
Right.
But what does Bob Lang think?
Well, I think we're going to come in mostly in line with what expectations are going to be.
So slightly higher in May compared to April.
Compared to April, yes, a little bit higher than expected. And I still think the conversation, Chris, is going to be about, well, we still need to wait and see much better numbers. Leaning towards that 2% goal of inflation before we start having a discussion about interest rates being cut.
So I think that there's a risk out there that the CPI and the PPI numbers come in a little warmer than expected. Right. So the consensus for both is up on a sequential basis, up on a year-over-year basis. But you know me, Bob, I tear into the data, and when I look at, whether it's the May ISM PMI numbers, the comments in the flash and final PMI from S&P, the wage data we saw in the employment report for May, there's a lot of upward pressure. Yeah. At the same time, oil prices have come down, gas prices have come down, and then the other factor is companies like Walmart and others that said, hey, we're going to have to raise prices in response to tariffs. So I would say there's a risk that the numbers come in a little warmer than the market's thinking.
Well, I think you don't want to look past that the recent drop in oil prices and energy prices, and that could be a good driver of the headline number. But as far as the core is concerned, I think core, which strips out the hotter than normal volatility with food and energy, I think you have to look at that core number as being much more important, much more relevant. In fact, you look at the Fed looks at something called a super core, which strips out not just the energy and the food, but also the rents as well too. So I think that if we look at that super core number, and if it comes in a little bit lower than expected, I think they're looking at about 2.4%. On the super core. I think that's going to be a significant number that's going to be discussed next week at the next Fed meeting.
All right, so let me ask you this, because in recent months, folks have been really focusing in on the CPI report. But given tariffs, given what I said about the ISM PMIs on manufacturing and services, should we maybe be a little more focused this time around on PPI?
Yeah, I think the PPI number is really something that is not, it's been somewhat neglected the last couple of months. Certainly consumer prices are important as well too, but also the inputs for corporations and how they factor in price increases as well too, certainly cannot be dismissed. And I think that's one of those things that people really don't take too much for granted in terms of pricing, in terms of the companies, what their plans are for raising prices later on in the year.
All right, so let me ask you just one other question as it relates to the Fed will say. So
Right.
we will get this inflation data, but we've also seen, rolling GDP forecasts that have pointing to the economy
Yeah.
really not rolling over, if in some cases strengthening compared to what we've seen, in recent months. Does this kind of put the Fed or keep the Fed in a box?
Absolutely, and I think that if you look at some of the forecasts out there, the nowcasting like GDP now, still coming in at they're expecting 3.9%, Chris, in the second quarter, which only has another week and a half left to go before we turn the page on Q3.
Right, but see, now that's important though, right? Because the Fed meeting, June 17th, 18th, right, with the conclusion on the 18th, with the updated SEP, which we'll talk about in a few minutes. We're not going to get any data for June until after the meeting.
Right.
So they're kind of making like an educated guesstimate based on 2 months of data in the quarter.
Right. You got to make some assumptions for what the trends are going to look like. And certainly the first couple of months of the quarter, April, and I think even the early part of May, kind of told the Fed that the economy is still moving in the upwards direction, and there's really nothing that they need to do. And I think a week and a half ago, Chris, we had quite a few Fed speakers out there saying the same thing. There's really nothing that they need to do to juice the economy up, right? I mean, the problem that they have, and as you said, they're possibly in a box over here, is if they do cut rates and they do allow banks to lend a little bit more at those lower rates, it's the risk that they have is that they're going to create a little bit more inflation on their own, and they really don't know what tariffs are going to look like, and what those price increases are going to do for the rest of the economy. And like you said, Walmart came in and said that they might have to take price increases, but there's some other companies out there that said differently. And I think like Costco, for instance, they decided they're not necessarily going to eat the cost, but they did kind of hint to the fact that they're not going to raise prices on consumers going forward. So I think that's
Home Depot said something like that. Target said something like that.
That's correct. And some of these other retailers like the Gap said the same thing as well too.
So just getting back to the Fed, you think that the message next week coming out of the meeting, June 18th, hey, we're going to continue to wait, going to continue to follow the data, we'll be patient.
That's right.
But Atlanta Fed President Raphael Bostic, who kind of is a little bit of a early spokesperson for the Fed, is out there saying, yeah, I only see one rate cut.
Yeah, and he's going out on a limb right now because that's not really where the Fed said they were going to be back in March.
They said two, but things change.
Yeah, and certainly, and I'm being even more hawkish than the Fed. I've been saying that for the past 4.5-5 months that they're going to have no rate cuts.
I have that time stamped in my notebook. Don't you worry.
Yes, I know you, and you're going to be bringing it out if they decide to change their mind.
Well, we'll see what happens.
We'll
see what happens.
That's all right.
So my thinking is that, again, based on the data that we're going to get for May, this inflation data, we could see the Fed's updated set of economic projections inch down from 2 expected 25 basis point rate cuts down to 1 this year.
That's right.
And I think the market would kind of react to that.
Well, the Fed futures right now are looking at the first rate cut coming in September, and the next rate cut coming in December. And so those are 2 meetings. We have 5 meetings left in 2025.
Yeah, so June and July are off the table.
That's right.
And that gives us several months for the Fed to collect more data and maybe have some greater insight to what's happening.
But there's only 3 meetings left after July. There's September, November, and then December.
Okay.
So, but there's all important Wyoming meeting, Jackson Hole coming up in August. That oftentimes the Fed chair, whether it was Bernanke or Yellen or in this case Chair Jay Powell, signaling what they're going to be doing going forward. So I think that that's a very important meeting coming up. Plus, there's some other central bankers who are going to be there as well too.
So no summer vacation for you?
No, never a summer vacation. My eyes are always peeled to what's happening with the Fed in August.
All right, so talk to me, Bob, about some key dates that are coming up for the market. Before we started taping, you were saying, Chris, there's really 3 sets of dates that we've got to pay attention to.
That's right.
Some people will cue into the fact that we're approaching before too long the quarter end.
Right.
the end of June. But talk to me about those two, and then also what you're watching for this other third key date to watch.
So we have the end of June coming up, which is the end of the quarter. We get a lot of rebalancing coming up. In fact, what's interesting is that the end of the quarter for March saw quite a bit of buying coming in by some pension funds, hedge funds, mutual funds. As they do the rebalancing between how much weighting do we have in equities versus how much weighting do we have in fixed income. So I think we're going to see a lot of movement in those asset classes, meaning I think there's going to be a lot of people, a lot of pension funds and so forth, loosening up on the fixed income side and rebalancing into more equities. So
why do you think that?
Now, why do I think that? It's because I think we've had weakness in fixed income this year, and I think there was a lot of pension funds that want to show less fixed income on their books right now, and I think that is the easy trade right now. Certainly, with interest rates where they are right now, at 4.25% to 4.5% on the 10-year, I don't think that's a bargain right here. I think that most pension funds are seeing that there's some risk in interest rates, and they'd rather be hiding out in equities right now, especially if the big the magnificent 7 names or continue to perform as they have been for the past few weeks.
So let's just ask this follow-up question to that. It sounds like you're saying you see money coming into the market.
Into equities, yes.
Right, into equities. What does that mean for your thinking about where the S&P 500 is trading, and can it go higher?
Well, I think on a relative basis versus valuation, I think it's pretty expensive right now. But going forward, I think that the market players are saying that there's some blue skies coming out in 2026 and even out in the out years 2027 that is going to bring valuations down. That they want to jump on board and want to be in equities as of right now, as opposed to fixed income.
So your comment on the relative expensiveness of the S&P 500, I think we're kind of in that point of time where we're trying to understand what second half earnings expectations are today.
That's right.
And what they're likely to be as we learn more about tariffs and trade deals for the second half of the year. So I think we're waiting on some clarity for that.
That's right.
Okay, so that was one of the dates.
Yes.
Talk to me about another one.
So there's another one coming up, Chris, on the 20th of June is a huge options expiration. We get these 4 times a year, at the end of the third Friday of every month in March, June, September, and December. So it's a huge options expiration. It's going to create a lot of volatility in the markets just based on these expirations. So that's going to be June 20th. What's interesting is that the day before, June 19th, the markets are closed for Juneteenth.
Right.
So that's going to be a real interesting type of week going on, because we have 3 days and then we have an off day, and then we have this massive options expiration where we have a lot of options are going to be expiring, not just for equities, but also for index options and indexes, futures on the indices as well too.
So it's interesting that this is happening in what is typically the sleepy summer, right? On a Friday, where typically Wall Street, late second half of June, July, August, Friday afternoons, they tend to get a little quiet. Do you think that changes it? And because we have a Thursday holiday, does this really complicate things?
It certainly does. And then when you throw on top of it, the third trifecta is that you have a lot of rebalancings going on with the indices. For instance, like the Russell 2000 often does a huge rebalance in their index at the end of June and at the end of December, and they try to line it up as close as they possibly can with the end of the quarter. So that would be around the 30th. So we may see stocks coming into the Russell 2000, other names coming out of the Russell 2000 that are not performing well. So we're going to get a lot of that shifting going on as well too.
So let's think about these 3 dates. Let's think about where the market is.
Right.
We're sitting here. We've got roughly 2 weeks left in the month of June. Then we march before too long into the June quarter earnings season. What is Bob Lang saying to investors? What should they be thinking about? How should they be positioning themselves?
Well, I think markets are very complacent right now. I think that the complacent attitude of the market is saying that, what me worry? I think it's, Alfred E. Newman, right? What me worry.
Right.
I don't have to, carry protection. I'm not really too scared or worried, because when news comes out, like last week's jobs report, or we've had some earnings come out, or even any news regarding tariffs are concerned, the market is taking it in stride. And the more that we get conditioned for that sort of reaction or response or behavior, the less we have to worry about having protection on. And it's those days, those times when something bad happens and we're not quite prepared for that, is when the markets really kicks everybody's butt and comes down, and we're not prepared for that, and we get a 2 or 3% down day, and what do we do about that? When the S&P 500 is down 120, 130 points, we're ill prepared for that. So I think that worries me right now, that people are not concerned about an event like that happening.
So when you see that in the current market setup, your advice is tread cautiously.
Tread cautiously, have a lot of cash in place, have some protection on, have some puts on. I know nobody really likes to, if they're investing in the market, they don't like to give money up and give money away like in put options, but I still think it's a very important way to protect your portfolio and protect what you have. Certainly the markets are not up a lot this year, but they've come a long way since
absolutely.
April 2nd, right?
Absolutely, yes.
The S&P 500 is up almost 20% since the lows in the early part of April. Who wants to lose those gains?
Not me.
Not me either.
Okay. So for someone who's not really used to using puts, is there any rule of thumb that you could share, say for the S&P 500?
Yeah, so I mean, you can certainly use inverse ETFs, which is what
we've used.
We've
Yeah,
used quite
right.
a bit. The SH, which is the short S&P 500, or the PSX, which is the short NASDAQ 100. So it really tends to blunt, Chris, some of the volatility that comes out of the markets when there's a lot of worry, a lot of doubt, a lot of concern. But those things don't start kicking up until we get them, the news, the response. So I think that at this point in time, the protection is really rather cheap, and it's easy to get in there. And if you're wrong, we just lift it up and get rid of it and say, look, okay, I was wrong. But hopefully the long stuff in your portfolio is going to carry the day.
Okay. All right. Let's shift gears, take some member questions. What do you say?
Absolutely. Let's do it.
All right. So first question. This is a good one. So last week on the podcast, we had a guest who was talking all about the importance of tracking insider selling. I asked a question about insider buying.
Right.
So we have a question. Bob, do you pay attention to insider selling, insider buying? Which one do you think is more important?
Well, I do think it's important to track these sort of things, but going with the understanding that there are a million reasons to sell, but there's only one reason to buy.
Okay.
Right?
Okay.
What's the one reason to buy? When you think market's going to go up, right?
Or that particular stock, as we're talking insiders,
Stock.
that stock is poised to move higher.
Right, that's right. So one reason to buy, a million reasons to sell. There's a lot of insiders that have these pre-planned selling programs.
That's right.
And they hit any time during the year. They're not really privy to any particular information. They're not supposed to be. But they could hit in the summertime, they could hit in the fall. These pre-planned selling programs that hit, if it happens to be coincidentally when the stock is at an all-time high, well, that's just a coincidence, and maybe they got lucky or something like that. But I think that if we're paying attention to one or the other, I think it's the insider buying, Chris. It's really, really super important, because if they know something and they're buying when there's no news or there's no particular reason for anybody to get long that particular stock, that particular company, well, he clearly knows something, and he knows she, and he knows that he or she knows that company or that stock is cheap right now, that why would they be buying it if they didn't think it was cheap?
So you would interpret insider buying as a positive signal, especially if it's a group of people doing that activity.
That's right. But but then again, they're not the smartest people in the world when it comes to, investing in stocks.
Okay.
Otherwise they'd be hedge fund managers. So I have to look at it, take it somewhat with a grain of salt, but also saying that it's important to understand and realize that if there's a consistent amount of buyers coming in to a particular stock at a certain price, well, it raises an eyebrow and say, I raises my interest, and I got to say, pay attention to that.
So something to watch, but not a silver bullet.
That's right.
Okay, let's go to our next question. Bob, a lot of positions in the portfolio. You do charts, all week long.
Right.
Is there any one position that you're really getting excited about these days that's in the pro portfolio?
Yeah, I love Amazon here. Really do love Amazon, and that stock has been on fire lately. It came down below $200, Chris, and floated around the 191, 195 area for about a week and a half, 2 weeks. And then it started its ascent, very slow ascent up towards 200. And once it broke that $200 barrier, Chris, about 202 or so, it really got my interest. And now it's about 215, 217, well off the all-time highs. And the all-time highs up there were 235, 237. So it's got some room to go, another 10% just to get back to the all-time highs. But you've got some catalyst there with Amazon, right? You've got earnings coming out in July, and don't forget, we've got Amazon Prime Days coming up in probably the middle of July. They usually have another one later in the year. I think it's October.
Correct.
So we'll have another one of those coming up, and then you've got other retail competition that is struggling right now. Obviously Target, and clearly we did hear some warnings from Walmart. So who's picking up share? It's got to be Amazon, right?
So it's funny that you say that, because we published a note this week to pro members that Amazon is taking share in certain categories from Walmart.
Yeah.
Right. They're also taking share, it appears, on the advertising side from Trade Desk.
Yeah.
And today they announced a new AI-driven video ad generation tool that could probably widen that lead as well. So I agree with you. I think into the second half of the year, I think Amazon's going to be a good play. Share with me a stock, Bob, in the portfolio or not, that you're kind of you're cooling towards.
Well, we talked about this one earlier today, Chris, and I did do the chart of it, is Apple. Apple is a little, hang
on,
kind of in
cooling
the crosshairs.
or cold? Let's drill into this.
Cooling.
Okay, why?
And I'd say only because, they just, they didn't really hit it out of the ballpark with WWDC this week. And mind you, maybe they're holding something in their back pocket for something later on in the year. I suspect that's probably the case. But frankly, not very many people are getting excited about it. I haven't heard a whole lot of people talking about upgrading their iPhones. And that the companies like Samsung and some of their competitors they're coming hard. They're coming hard at Apple and trying to get to their market share. And I suspect that they're worried about losing some of that share. I think Macs are obviously, very, very strong and hugely profitable products for Apple. The iPad as well too. I just bought a new iPad myself. I love it. Love the new iPad. But it wasn't very expensive, and I was able to turn in my old iPad. I got a little bit of money for that one, but still, I think that and I have a watch. I really love my watch, but I'm not looking to upgrade that thing.
You're
for a while.
lovingly trapped in the Apple ecosystem.
They have me.
Okay.
They roped me in, and I can't get out of there.
So I did see the chart that you put together for Apple, and it looks like it's hugging a key level of support.
Yeah.
Kind of no man's land. I agree with you that WWDC was a
nothing burger.
Evolutionary, not revolutionary. That's what I would say.
Right.
I've already downloaded the iPad OS 26 developer software. Some interesting things, I have to say. I think you'll be pleased when you finally get around to it.
Yeah.
But I agree with you that they're kind of in the show me camp still on the AI front.
Yeah.
I think when they eventually get there, they will help foster this upgrade cycle that we keep hearing about. And the longer it takes, the bigger the number of phones that need to be upgraded. So they have that maybe in their back pocket. But I agree with you that here today, no reason to buy, no reason to sell. I think we need to wait and see what develops.
Yeah, I think we have to be, from Missouri. And what is
the show me state?
The show me state.
Okay.
Apple's got to show me something. It's got to show me something that they can really attract some excitement and some enthusiasm from the consumer out there. Otherwise, it's going to be dull and just stay where it is.
Okay. All right. Before we get out of here, Bob, we talked about quite a bit. Anything that we didn't talk about that we should have?
No, I think that we covered a lot of bases here. I think that it's really important to pay attention to what the Fed is to say next week. Chair Powell's press conference and so forth. Certainly since the last meeting and now, he did have a face-to-face with President Trump, and I suspect he's going to be asked a question about that. He's very coy about talking about President Trump. He doesn't really want to give too much away, but I suspect that some of that conversation may get dribbled out. We might hear a little bit of what took place then. But as far as the Fed is concerned, I think it's steady as she goes right now until the end of the year.
Do you think Powell gets asked about President Trump suggesting that Treasury Secretary Bessent could be a replacement for Powell when Powell's term is up?
He will get asked, and he will punt that question.
Yeah, he'll say
as
nothing.
He always does.
Yeah. All right, Bob, thank you so much for joining me here at the New York Stock Exchange.
Great to be with you.
Folks, that is this week's episode of the Stocks and Markets podcast. Thanks for tuning in. We'll be back with you with a new episode before you know it.